This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. Hello everybody, so tonight's video is going to be pretty quick. I'm going to go over the data, the earnings, and do a fairly fast technical analysis over the SPY and just kind of give you my overall for the markets. Now, for the live streams, I did change the date from at least, last Sunday's video. So I will be streaming full time, Monday, Tuesday, Thursday, and Friday. So just not Wednesdays, from that 9:15 a.m. to anywhere from 11 to 12 a.m., give or take. Maybe even longer than that, depending on the day. But at least Monday, Tuesday, Thursday, and Friday, at that 9:15 a.m. Eastern Standard Time. So 15 minutes before market open. I look forward to everybody joining me for those live trades. We've been doing very, very well. So I would really like to see a lot of you there. Um, with that said, let's go ahead and jump into the data and earnings and get this video on the road. This week we do have some pretty large data, primarily on Tuesday with the CPI. Unfortunately, I won't be going over every single data set like I usually do in my Sunday videos. This time I'm just not feeling too great, and I just really want to cover what's very important. So Tuesday we have the CPI. Um, the forecast is showing a slight elevation in the year over year. I heavily disagree with that. I do believe that the CPI will probably be flat, meaning it last value or last ratings values, or even coming in cooler than that. So that's at 8:30 a.m. on Tuesday. One of the bigger data sets this week. Now for Wednesday we do have the EPI. Um, I don't really have any take on that. The forecast is expecting a slight increase. I think that's fair to have a very, very slight increase in the core month over month. Um, Other than that, it should be pretty much neutral. I'm not too worried about that data set at all. Now we do have the 30-year bond auction at 1 p.m. on that Wednesday. That will be very important because obviously the 30-year bond is, one of the largest denominations of, a treasury you can get. So with that said, we want to see if this, you know, pulls the yields upward or downward. Overall, I'm expecting the yields to pull downward, but we have had the yields pulling upward with the increase in oil volatility. So it kind of depends on what happens with the conflict this week. Currently, oil prices are up as of making this video, but I still overall am expecting treasury yields to start pulling down at the long end to start gaining some weight. For Thursday, very important day. Besides the jobless claims and everything, we have a lot of retail data. So the core retail sales, export and import, price index, retail control, retail sales, all very, very important data sets at 8:30 a.m. So we'll go over that when the time comes. Not really too interested for any of the other data sets that day. And for Friday, we do have the New York State Manufacturing Index. I don't really care too much about that. I don't think Friday's data is very important whatsoever. Now, getting into the earnings, and let me make sure the actual window is set up properly. There we go. So the earnings this week, we have, let's see, we have Quantum this week, and we have a little bit of Bitcoin related stuff. NXT is kind of one of the big ones I'm looking at for tech overall. We also have Applied Materials on Thursday afternoon, so that's a very, very crucial one. That's a massive semiconductor. Last time they had their earnings, the market rallied pretty hard, so we cannot really, count them out. Any semiconductor company right now is a big deal. Now, one that many don't really look at right now, but Cisco's a very important company. Um, I don't think their earnings are really going to do much to the market, but it is one that I am very keen to keep on my radar. As for everything else, nope, not really seeing anything interesting. So yeah, that's kind of the earnings this week. But I wanted to quickly go over the Fed CME because a lot of people are thinking about oil incorrectly, I believe, and I'm just going to hopefully realign that assessment very quick. Um, this is the June 17th FOMC projections. So we actually have a 4% chance of a rate cut. Okay, not a rate hike. The hikes are completely out of the window. Um, but a rate cut. Now that's interesting because I thought everybody said that oil brought inflation. Well, you don't cut into inflation. And let's go into December, and this will also show this. So for December, see the current. Ooh, that shifted a lot. Okay, so for December, the odds of the rate hike actually did increase quite a bit. Last week, this was leaning over, I believe, 11 or 12% for the rate cut, where this was only 9% for the rate hike. Currently, that's completely shifted. Right now, the rate cut is actually far less, which I'm actually kind of surprised about. I do believe that this will pick up very heavily. Um, but yeah, that's very surprising to see that heavy of an increase on the December, especially when really nothing changed over the last few sessions other than um, today there was the heightened um oil volatility because President Trump basically declined Iran's proposal. Um, but other than that, I'm not really seeing why there was such a massive shift. Now, we will check back on this again, um, over the next few weeks, but I heavily expect this rate hike to kind of go outside the window and for the rate cut to actually be priced in further. It's very odd to see June pricing in of a rate cut, even if it's 4%. July rate cut 0% of a hike still. September 7% chance of a rate cut versus a almost 2% chance of a rate hike. And then all of a sudden October and December get completely flipped. So that's interesting. Yeah, we'll be talking about this a lot more in the future. Because this is kind of messed up right now. It's weird to see basically 3 of these months pricing in the rate cut. Well, not pricing in, but at least having it on the board. And then all of a sudden, October and December shifts to rate hike when it's basically 0%, 0%, and then 2%. So something's a little funky there. We'll figure it out over the next few weeks. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the SPY technical analysis, again, we're going to make this very, very quick because there really isn't a whole lot to go over here. Thesis for the last 3 sessions is pretty much still in play. And the reason why is because, sorry, I had to adjust my mic. The reason why that's the same reason is because we see the upper Bollinger here still just kind of trending within the same direction, so slightly pulling upward, while we're seeing the 5 mile aggressively pulling upward towards that upper Bollinger. Now, we're not going to ever see the 5 mile pull above the upper Bollinger in this situation. I don't think anyway. Um, However, what I am expecting is this upper Bollinger to start expanding slightly. Now, over the last few sessions, we have been really looking for this upper Bollinger move, and I've talked about the mechanics of this, umpteen times, and I will go over it again during the stream tomorrow. But over the last 3 sessions, we've had 3 upper Bollinger rejections. Okay, that's actually a very, very, very bearish signal. And just to very quickly show why that's such a bearish signal, is that we were having those same rejections before this massive dump in SPY before the war started. And I'll get to that note in a little bit. We were also seeing these massive rejections back during the major sell off of early 2025. We kept getting up to the upper Bollinger, rejecting the range, kept getting up to the upper Bollinger, rejecting the range, getting up to the upper Bollinger, and just complete sell off. So we're not at that point yet, but it's starting to become a concern. Between me and some of the other very experienced traders in the group, it's becoming a concern that we have not fully tried to claim that upper Bollinger. As of Thursday's close, we were only off the upper Bollinger by, I think, only 40 cents, something like that. But it was still far enough to not count that as an upper Bollinger day one. Now, to circle back to this point in just a second here, I want to go to the weekly time frame. Because on the weekly time frame, and we're going to go ahead and delete that. On the weekly time frame here, we did secure the upper Bollinger week one, okay, which means that week two should be giving us a higher high, okay, and that's what I was trying to show with these candles. But week two should be providing us that higher high, and with that higher high, with us not having the daily upper Bollinger moves, what this is telling me is that on the daily time frame, we should be seeing this upper Bollinger mechanic kick in. We should see the upper Bollinger day one taken, upper Bollinger day two with the higher high, and then the downward consolidation towards the 5 mile. Um, However, if that's not the case, then we just have to simply look for a 5 mile rejection. Now, the 5 mile will be around probably the 731.30-ish mark, give or take. So with the current price action, the overnight is sitting at 736. So we'd only need to come down $5 to retest that moving average. Again, testing both the upper bounds and the lower bounds of that moving average being the $1 to $2 above the actual price. Um, so that gives us roughly $5 to $7 downside here. Okay. But the upside is the upper Bollinger. Tomorrow, Monday, the upper Bollinger will probably be around that 740 range. And that means that if we're going to secure that upper Bollinger day one, we have to close above that upper Bollinger, meaning on the daily time frame, we would basically have to close above that 740, 741 range, giving us the upper Bollinger day one, day two, a higher high, so I'm really targeting towards that 744. Okay, if this occurs within the next 2 sessions anyway, that 744 should definitely be on the table. Okay, as we start pushing into the upper Bollinger, the 5 mile will start pulling up towards us, and then on the third day or the second day of hitting that higher high, we can start to have that downward consolidation towards the 5 mile, whether it comes on the day two, day three, or day four. That will occur. We will have that 5 mile retest. And from that 5 mile retest, we can then either push back up into the upper Bollinger or retest the 20 mile, which has not been tested in, I believe, over 24 sessions now. So it is definitely becoming time for this 20 mile range to be tested. That 20 mile range is a whole $23 to the downside. So I'm really expecting this final push, the 20 mile to pull upward slightly, 5 mile to pull upward slightly, start testing the downside, give the 20 mile a little bit further time to get around that 718, 720 range, with with the 5 mile being around probably around that 736, give or take, by the time we go to test it. Um, that gives the 20 mile not such a massive gap between us being able to test it. So really, that's what I'm expecting over the next few sessions. Um, we will be covering it in the stream pretty much, you know, very in depth. We will be trading this live, so um, that's really the expectation here. Either we're going to the upper Bollinger or we're going to push down to the 5 mile. From that 5 mile, we will either accept the test and continue moving downward or reject it and have that upper Bollinger push. Now, in terms of structure, and I just want to turn off some of this stuff for a second, if I can get to it. So in terms of structure on the hourly time frame, right? What's something we continue to see occurring here? We see a cup. From the top of this cup, bearish structure, exactly like we anticipate. Okay. From that bearish structure, we have a handle, okay, which is a nested cup, and that gives us the breakout of the cup and handle here. This breakout then creates a little bit, oops, I didn't mean get that arrow, but creates a little bit of bearish structure. But again, this is a whole nother cup. This is a nested cup. We are expecting bearish structure at the top. And from that bearish structure, we now have an additional handle pulling us upward. Okay. So it's very hard to look at this as any form of bearish structure. The only true bearish structure that I have any form of concern with is potentially this double top right here. Because if that is a double top, there's a huge amount of liquidity that could be taken to the downside. But again, this is going to be a move that's going to take the rest of the week, not just a 1 or 2 session thing. So we have plenty of time to really prepare for this downside if it's coming. We're going to be able to watch the VVIX, watch the HIG, watch some of our other instruments to really see if, we're truly going to be selling off or not. So that's what I'm expecting with that. Now, on the weekly time frame, I just kind of want to pull up this note that I have written for one of my posts. And this is daily time frame here, but this will be weekly. So you can just ignore that for a moment. But basically, again, just to quickly cover this, we did have the upper Bollinger week one take place here. And that's very, very crucial. That's telling us that we should be seeing the higher high of the upper Bollinger week two this week. Okay. That higher high again will coincide with the daily upper Bollinger push. And from that higher high of both the daily and the weekly, we're both expecting downward consolidation from that range. So a lot of this lines up very much with what we've been looking at over the last few sessions. We've just been really denied that move. And if we continue being denied that move, then the market will turn very bearish. Okay. But so far, I'm not seeing that. So far, it's looking like that we will get that breakout. Now, just a couple other things I want to show, which I'm going to turn off the drawings here. So on the weekly time frame, we see semiconductors. They've been absolutely blasting. However, from the last upper Bollinger move, that was not meant to be. That was meant to be an arrow. We did have the 5 mile test. Okay, which means that with this weekly upper Bollinger from last week being the day one, essentially, or the week one, essentially, um, that gives us the range for this week to give us a higher high of the week two. Well, what does that mean in terms of semiconductors? That means that we should be seeing well above the 520 range. Currently the overnight is at 523.70. So that's aligning very well with that. Now in terms of the daily time frame, we let's see, I want to make sure we closed above the upper Bollinger. We actually did close above the upper Bollinger for semiconductors, so that's showing that Monday we should be seeing that day two higher high. Um, Potentially we could be seeing a day three push here, but we will go over that again in, when it's time. Now with QQQ, even though we're having a little bit of selling in the overnight, the same thing applies here. We had the day one upper Bollinger close um as of last Friday's session. So that means that Monday, tomorrow, we should be seeing a higher high, which means that we should be seeing above this 711.23 range. We should be basically seeing that 712, 713, 714, potentially even higher than that. So there's still quite a lot of bullishness to run here. And one of the last few things I want to really show is that the HIG has still been buying upward. Now, usually when we see the HIG selling, that becomes a concern. We were seeing a little bit of selling over, the beginning of the month. Um, However, this has started to turn into buying again. Um, if we continue to see the buying here, and we can just ignore some of my drawings. Sorry, I've been having to draw a lot with the date or with the stream. We will then see this major cup and handle form, which is telling us that, corporate credit is wanting to leg upward. Okay. Well, legging upward in corporate credit is telling us that all of our equities are wanting to run. Um, Another thing is that Bitcoin Bitcoin has been pulling up quite a bit recently. Um, again, since February, it was down what at the basically the 60,000 range. Currently in the overnight, it's at 81,000. There is a cup here all the way to the 82 1,800. So very likely we're going to see that occur over the next 1 to 2 sessions. If we see buying within Bitcoin, it doesn't always allude to buying within equities, but it definitely heavily supports it. So we will be looking for that. Um, and what else? Let's look at the VVIX here, even though it's closed, but the VVIX is still in this very, very concerning range. Okay, and I don't want all these drawings on here right now. But it's still in a very concerning range. And what I mean is that last week I was really expecting the VVIX to pull below that 92 range to really signify that basically there was no hedging of the downside within the equities and that dealers were expecting full upside. We did not see that. In fact, we saw the VVIX pull downwards slightly and then pull all the way back up towards this. It was the 97, it says 96, but it was basically all the way to that 97 something range. Um, and that's very concerning because this is between this very, very cautionary range, um, which I do have those nicely marked out. Uh, of 98 means they're selling, between the 92 to 98 is cautionary range. That means there can be both buying and selling. It's just kind of the range, again, you have to be very cautious of. And below 92 means really that there isn't much selling to be had at all. So this week, if we're to get our upper Bollinger moves, I do want to see the VVIX being pulled below the 92 range. We may not get that, but it's something I will be looking for quite heavily. So with that said, I think we all have our expectations set. Either we're going to be pushing the upper Bollinger, or we're going to be coming down and retesting some of these moving average supports. So with that said, thank you for watching, everybody. Thank you for supporting. I do have a Twitter now, or an X account at Cups and Handles. I will be posting pretty much tons of different TA and everything on there because unlike Weeble, I'm not censored on X for what I type. So I'm actually able to type stuff on there. So if there's anything you're wanting me to, do technical analysis on, if there's any important messages, that's probably one of the best ways to contact me. Unless you're within the group or watching the stream and within the stream chat. So yeah, I look forward to seeing you all tomorrow morning, 9:15 a.m. We will be going over, day trades and longer trades and all sorts of stuff. So look forward to seeing you all there. Thank you all for supporting me. You could like, share, subscribe, anything to help boost the the algorithm a bit on my channel and everything now that I'm actually trying to get it started and get it really going. That would be more than helpful, and I would appreciate it greatly. But thank you for your time, and I will see you all in the morning.